Good morning and welcome to TOI Japan Market Radio, broadcasting from Tokyo on January 30th, 2026. I'm your host, and today we're bringing you the latest developments from Japan's equity, currency, and fixed income markets for global investors tracking their Japan exposure. Let's dive straight into the numbers with our portfolio manager.
Thanks for having me. So looking at the close today, we saw a bit of a mixed picture across Japanese equities. The Nikkei 225 finished at 53,322.852, down 0.099%, essentially flat on the day. TOPIX showed more strength, closing at 3744.0, up 0.672%, which tells us there was some breadth in the market beyond the large cap index heavyweights. The Mothers Index, which tracks smaller growth companies, was down 0.316% at 2,209.0, and Japanese REITs pulled back nearly a full percent, down 0.934% to 2014.5. On the currency side, dollar-yen moved higher to 154.019, up 0.603%, so we saw some yen weakness today. Gold in yen terms dropped sharply, down 6.852% to 18,895.0, and crude oil was basically unchanged, down just 0.153% at 65.32.
That's a solid overview, and it sets the stage for what's been driving markets not just here in Japan but globally. The major headline hitting wires overnight is President Trump's pick for Federal Reserve Chair. He's nominated Kevin Warsh, a former Fed official, to lead the central bank. This is a significant leadership transition at the world's most influential central bank. What's your initial read on how this matters for Japan-focused portfolios?
This is absolutely critical for Japan watchers. The Fed chair appointment shapes the trajectory of U.S. monetary policy, and that in turn drives the interest rate differential between the Fed and the Bank of Japan, which is the primary driver of dollar-yen and capital flows into Japanese assets. Warsh is generally perceived as more hawkish than some of the other names that were floated, meaning he may favor keeping U.S. rates elevated for longer to ensure inflation stays under control. For Japanese equities, this creates near-term uncertainty. If markets price in a more restrictive Fed, that could strengthen the dollar and reduce risk appetite for flows into Japan. But conversely, if the dollar strengthens against the yen, that's a tailwind for Japanese exporters who benefit from a weaker yen when they repatriate overseas earnings.
So it's a double-edged sword depending on how investors interpret the policy signal. What about the direct impact on dollar-yen itself?
Dollar-yen is the most immediate transmission channel here. A hawkish Fed nominee typically supports dollar strength, and we're already seeing that today with the move above 154. If Warsh's confirmation hearings reinforce expectations for higher for longer U.S. rates, we could see further upward pressure on dollar-yen, which would pressure the yen weaker. That benefits Japanese exporters, but it also complicates the Bank of Japan's efforts to normalize policy. The BOJ has been trying to gradually exit negative rates and yield curve control, but a weaker yen due to Fed divergence makes that path more challenging because it imports inflation through higher import costs.
And presumably this also has implications for Japanese government bond yields.
Exactly. Fed policy expectations influence the entire global yield curve, including JGBs. If U.S. Treasury yields rise on stronger rate expectations under Warsh, that puts upward pressure on Japanese yields as well, even though the BOJ remains the primary driver domestically. The risk is that sustained upward pressure on JGB yields could challenge the BOJ's yield curve control framework, especially if they're trying to keep the 10-year yield anchored while global rates are moving higher. So this Fed nomination is something we need to monitor very closely through the confirmation process for any concrete policy signals.
Staying with the theme of policy and market reaction, U.S. stock index futures actually sold off overnight following this Warsh announcement. That's caught some attention as a potential warning sign. How are you interpreting that weakness in U.S. futures in the context of Japan's equity markets?
The futures sell-off reflects immediate market concern that Warsh may be more aggressive on rates than the market had been pricing in. For Japanese equities, this has a mixed outlook. In the near term, weakness in U.S. equity futures tends to weigh on sentiment here, especially for exporters and global cyclicals that track U.S. economic conditions closely. We saw that modest weakness in the Nikkei today, down 0.1%. However, if the hawkish Fed signal leads to sustained dollar strength and a weaker yen, that actually supports the earnings outlook for Japanese exporters, which have been a major driver of equity performance since late 2024. So it's really a question of which effect dominates: risk-off sentiment from tighter U.S. policy, or the currency tailwind from a stronger dollar.
And presumably the TOPIX outperforming the Nikkei today suggests there was some sector rotation or breadth underneath the surface.
That's right. TOPIX was up 0.2% while the Nikkei was essentially flat, which tells us that the market had reasonable breadth today despite the headline uncertainty. Domestic-facing stocks and financials may have benefited if investors are pricing in the possibility of higher Japanese yields following the U.S. move. Banks in particular tend to benefit from a steeper yield curve. So even though the Nikkei heavyweights were mixed, there was clearly some buying interest in the broader market.
Shifting back to equities and index mechanics, we also saw news today that Nikkei Inc. will be lowering the weighting of Advantest in the Nikkei 225 index. Advantest is one of Japan's major semiconductor equipment makers and a pretty significant constituent. What's the significance of this reweighting for investors?
This is a technical reweighting rather than a fundamental market event, but it does carry some signals. Advantest is a heavyweight in the Nikkei 225 and a key bellwether for Japan's semiconductor equipment sector, which is critical to the country's export economy. A reduction in its index weight could reflect changes in its market cap relative to other constituents, or it could be part of periodic index methodology adjustments. The mechanical impact on the Nikkei 225 itself is modest, because other stocks' relative weights will increase to compensate. But if this reduction reflects declining valuations in Advantest specifically, that could signal sector-specific weakness in semiconductors, which have been a major driver of Japanese equity performance.
So this could be an early warning sign about the semiconductor cycle or demand outlook.
Potentially, yes. Japan's semiconductor equipment makers like Advantest are highly sensitive to global chip demand, particularly from Taiwan, Korea, and China. If there's softness in that demand cycle, it would show up first in these companies' valuations and order books. That said, we'd need to see more data to confirm whether this is a one-off index adjustment or part of a broader trend. From an FX perspective, sustained weakness in the semiconductor sector could weigh on Japan's export outlook and potentially pressure the yen if it signals deteriorating growth prospects. But for now, this is more of a watch item than an immediate risk.
Understood. And presumably Japanese government bond yields aren't going to react much to a single index reweighting like this.
Correct. A single index reweighting has minimal direct impact on JGB yields. However, if we do see sustained weakness in the semiconductor sector more broadly, that could eventually feed into macro growth expectations and influence long-end yields. Weaker growth prospects would typically support bonds and push yields lower, all else equal. But right now, the bigger driver for JGB yields is the global rates picture and the BOJ's policy stance, not sector-specific index adjustments.
So pulling all of this together, we have a Fed leadership transition that's creating some near-term volatility, a yen that's weakening on the back of U.S. rate expectations, and some sector-specific rotation happening underneath the surface in Japanese equities. What are the key themes global investors should be watching over the next few sessions?
I think the number one theme is the dollar-yen trajectory and how that feeds through to Japanese equities and BOJ policy expectations. If dollar-yen continues to push higher on hawkish Fed expectations, that's a tailwind for exporters but a challenge for the BOJ's normalization plans. The second theme is confirmation hearings for Warsh and any concrete policy signals that emerge from those. Markets will be listening closely for his views on inflation, the neutral rate, and the pace of any future policy adjustments. And finally, keep an eye on sector performance within Japan, particularly semiconductors and financials, as those will tell us a lot about where the market thinks growth and rates are headed.
Great summary. Before we wrap up, any final thoughts for investors monitoring their Japan exposure today?
Just that this is a period where cross-asset correlations matter a lot. Developments in US policy and the dollar are feeding directly into Japanese asset prices, so it's important to monitor not just domestic Japanese data but also the global macro backdrop, particularly Fed expectations and Treasury yields. Stay focused on the data and the policy signals, and don't get too caught up in day-to-day volatility.
Well said. That's all we have for today's briefing on Japan's markets. If you're a global investor following Japan or managing exposure to Japanese equities, rates, or currency, consider subscribing to TOI Japan Market Radio for daily updates and analysis. Thanks for listening, and we'll see you next time.